Welcome to another deep dive. Today, we're plunging into a topic that sits right at the intersection of cutting-edge technology and something that affects us all, our financial markets. We're diving into a fascinating document from the Economic Times, which, well, it sheds light on how a major regulator is stepping up to ensure that the immense capabilities of artificial intelligence and machine learning are used responsibly. Our mission today is to unpack these proposed guiding principles from the Securities and Exchange Board of India, Sebi, and understand what they mean for market integrity, investor protection, and, yeah, even for you.
What's truly fascinating here, I think, is how proactively they're addressing both the immense potential and, crucially, the inherent risks of these powerful technologies in a sector as critical as securities.
So let's unpack this. Sebi is proposing these principles to guide market participants. I mean, picture a financial market running on algorithms, making split-second decisions, guiding investments. That's the reality we're moving towards, isn't it? So it's crucial to understand where AI and ML are already, embedded. What kind of AML applications are we even talking about here?
Well, currently, AI and ML are pretty widely adopted by market participants for all sorts of functions.
Like what, specifically?
Okay, so this includes everything from advisory and support services for investors to sophisticated risk management, streamlining client identification and monitoring process.
KYC stuff.
Exactly, that kind of thing.
Yeah.
Also enhancing surveillance capabilities for regulators and even pattern recognition for trading strategies. And of course, they're also critical for internal compliance and, importantly, bolstering cybersecurity measures.
Wow, okay. That covers an incredibly wide range. It really sounds like AML is already deeply integrated. Were there any applications that particularly stood out to you looking at the source material, or perhaps some where the risks might be, particularly pronounced?
Well, the sheer breadth of application itself is notable, really.
Yeah.
But if we connect this to the bigger picture, Sebi's goal seems to be twofold: to optimize the benefits that AML brings, improve productivity, efficiency, better outcomes across all these areas, while at the same time minimizing the potential risks. It's all about safeguarding investor protection, market integrity, and ultimately overall financial stability.
Okay, so after identifying these broad areas of use, what specific challenges or risks is Sebi really aiming to mitigate here? Where are the potential pitfalls they're keen to address?
Right, and this raises that important question about managing these systems responsibly. Sebi specifically notes that while beneficial, AML usage can create or amplify certain risks.
Amplify? How so?
Well, think about it. Sebi's concern about adverse impacts to investors isn't just theoretical. Imagine an AI-driven trading algorithm misinterpreting a market signal, maybe because of some weird data anomaly leading to a sudden cascading sell-off, or maybe a personalized investment advisor, AI inadvertently reinforcing existing biases in its data.
The bias issue, right.
Yeah, potentially leading to suboptimal or even, frankly, unfair outcomes for certain customer segments. These risks could really negatively impact the efficiency of financial markets and critically result in significant harm to investors.
Okay, so these are serious potential consequences, definitely not trivial. How does Sebi propose to manage these risks then? What are the key high-level principles they've put forward to tackle these challenges?
So the proposed principles, they came from a SEBI-constituted working group. This group apparently studied existing guidelines globally and within India too. And the aim is to ensure market participants have reasonable procedures and control systems in place for supervision and governance of these powerful AML tools.
Reasonable procedures. Okay, let's get into the specifics then. What are some of the standout requirements for market participants using these models? What do they actually have to do?
Okay, well, one crucial aspect is the requirement for market participants to have a dedicated internal team.
An internal team.
Yes, and this team must possess adequate skills and experience. Their job is to monitor the performance, the efficacy, and the security of deployed algorithms throughout their entire lifecycle, from development to deployment and beyond. And furthermore, this team is responsible for ensuring the auditability and, importantly, the explainability and interpretability of these AML models.
Explainability, that seems key. Why is that so critical?
Well, it isn't just about debugging, right? It's fundamentally about trust and accountability. When an AI makes a critical financial decision, investors, regulators, they need to understand why.
Right, you can't just have a black box making calls with people's money.
Exactly. Without explainability, it is a black box.
Yeah.
The reasons for decisions or even the potential for unforeseen negative outcomes or biases could just go unnoticed. That makes true oversight almost impossible, especially in a complex market.
Yeah.
And they also must establish clear procedures for handling exceptions and errors related to these systems.
That's a substantial requirement, building an internal team with specialized AML skills. Is Sebi outlining how these teams should be structured or like what specific qualifications they need? And I mean, considering the talent crunch in AI right now, how practical is that for every market participant, especially the smaller ones?
That's a fair point. The document emphasizes the need for these skills in the oversight function, but it seems to leave some flexibility in the exact structuring. That's pretty common in principle-based regulation.
Oh, okay.
But yes, it's a significant investment, no doubt. It really underscores the seriousness with which Sebi views these technologies. And you're right, building that talent is definitely a challenge across the industry.
Okay. So beyond internal oversight, what if an AI-based system just completely fails, like goes offline or haywire?
Yeah.
Is there a plan for that scenario?
Absolutely. The working group proposed that market participants establish robust fallback plans.
Fallback plans. Okay.
So in the event an AI-based application fails, maybe due to technical issues or some unexpected disruption, these plans kick in to ensure that the relevant function can still be carried out through an alternative process. It's a critical safety net, really, to prevent market disruption.
That sounds like a crucial safety net, definitely. But what kind of alternative processes are we talking about? Does this mean a human steps in, or is it another maybe simpler AI system, or perhaps just going back to manual operations? And how often would you even expect such a fallback scenario to realistically occur?
Well, the principle focuses on ensuring the continuity of the function, right? So the specific alternative process could vary depending on the application. It might be human intervention in some cases, or perhaps switching to a different, less complex system. The main goal is just to minimize the impact during these unforeseen circumstances. And while the frequency of failure hopefully isn't high, if the systems are robust, having these plans in place just acknowledges that, look, no system is infallible, especially not in dynamic market conditions.
Right, good point. Transparency seems like another vital piece here. What about informing customers? Do they need to know if AI is making decisions about their money?
Yes, this is indeed a vital point for transparency and accountability. It's proposed that if market participants use AML models for business operations that directly impact their customers,
Like what kind of operations?
things like selection of trading algorithms, asset management, portfolio management, or even advisory and support services. If AI is involved there, they should disclose this to those customers. It just ensures customers are aware of the role AI is playing in their financial decisions.
Makes sense. Okay, testing and data seem like absolutely huge components of any AI system. What are the requirements there? How do they make sure these things work properly?
Right. For testing, models must be adequately tested, obviously, but also continuously monitored to validate their results over time. And crucially, this testing needs to be conducted in an environment that is segregated from the live production environment before deployment.
Like a sandbox.
Precisely. This ensures the AML models behave as expected under both stressed and unstressed market conditions, minimizing nasty surprises once they go live. And regarding data, which you mentioned, market participants must maintain proper documentation of all their models, and they have to store the input and output data for at least 5 years.
5 years. Wow, that's a significant data retention period, isn't it? What about the security and privacy of all this sensitive financial data they're holding on to?
Yeah, it is significant. And because these systems rely so heavily on data collection and processing, Sebi emphasizes that market participants absolutely must have a clear policy for data security, cybersecurity, and data privacy. Moreover, and this is important, any technical glitches or actual data breaches must be communicated promptly to Sebi and other relevant authorities. This ensures immediate regulatory awareness and hopefully a swift response.
Okay, so these are the core principles, especially for those customer-facing applications. But I think I recall you mentioning earlier that Sebi's taking a more nuanced approach. What does that mean for AML used in other, maybe less direct areas?
Yes, that's quite interesting. What's fascinating here is that Sebi isn't applying a heavy, one-size-fits-all approach across the board. They've proposed what they call a regulatory LEAT framework for AML usage in the securities market, when it's used for purposes other than those business operations that might directly impact customers.
So like internal stuff.
Exactly. Maybe internal operational efficiencies, background risk analysis, things that don't touch customer outcomes directly. This suggests a more tailored, risk-based approach to regulation, acknowledging that not all AI applications carry the same level of immediate risk to investors or market stability.
Got it. A lighter touch for less critical applications. Okay, so let's bring this back to the listener.
hmm
What does this all mean for you, whether you're an active investor or maybe just curious about how technology is shaping our world?
Well, I think this discussion really highlights the proactive steps regulators like Sebi are taking. They're trying to embrace innovation, which is good, while simultaneously ensuring a stable and secure financial environment. It points towards a future where, yes, your investments might increasingly be guided or managed by AI, but hopefully with robust safeguards in place designed to protect you from its potential pitfalls.
Yeah, it really feels like it's about building trust in these incredibly powerful new tools, doesn't it? Knowing that there are supposed to be internal teams monitoring performance, that there are fallback plans for when things inevitably go wrong, and disclosure requirements for customer-facing AI that helps foster that trust. It seems like SEBI is laying down the ethical guardrails for the future of finance here, really asking how much automation we can safely embrace without sacrificing critical things like transparency or, human oversight. So we've navigated the complex world of AML regulation in financial markets, at least SEBI's proposed approach. It's clear the aim is to strike that delicate balance, harness the immense power of AI for efficiency and innovation while rigorously protecting investors and maintaining market integrity.
It definitely is. And this, of course, raises a huge ongoing question. As AI and ML continue to evolve at, well, lightning speed, how will regulators everywhere adapt quickly enough? How do you ensure these principles remain robust and relevant without accidentally stifling the very innovation they seek to harness? That's the constant tightrope walk.
That is indeed the big question, something to ponder as you continue your own deep dive into this ever changing landscape. Until next time, stay curious.